2023 was a year that nobody predicted. Top economists were calling for a recession, and the outlook was bleak. And yet, the market, which is the S&P 500, returned 26.3%, and the Nasdaq returned over 40%. There's a lot to unpack in the year of 2023. I want to talk about some of the good of what kind of led to positive growth in 23. And then I also want to talk about the bad that's still out there. And finally, we'll talk about the unpredictable, which is the stock market as a whole. So the good, the biggest good, and the number one area that I look to as to why we stayed out of a recession was that unemployment stayed towards all-time lows. If people are going to a job and they're receiving a paycheck and they're spending that paycheck, it is pretty hard to go into a recession. Number two was the excitement around ChatGPT and OpenAI. This was something that really nobody saw coming, but the advances in the artificial intelligence world led to a lot of excitement. That excitement poured into predominantly the Magnificent Seven, which are seven of the biggest predominantly tech companies, and they led to the vast majority of gain in the market in 2023. Those seven companies were up 75%, where the rest of the market was closer to 6%. That's 493 companies that were at 6%, 7 companies at 75%. And what you would have been returned if you were in the S&P 500 is 26.3. That's astounding. Some other good out there was that the Fed paused rates. So this was a bit of a long shot if we look back to earlier in 2023, but it came to fruition by the end of 2023. In 2022, we saw tremendous interest rate hikes, and we're dealing with the pain of going through that. Now that they've paused, there's more room to breathe, and looking at 2024, they're actually talking about cutting rates. One of the biggest things as well that I saw was the broadening in November. So quarter three was not good for the overall market. We experienced our market correction, and most companies were down. But in November, all those companies came roaring back, or most of those companies came roaring back. And a lot of that was outside of those Magnificent Seven. And it led to an increased breadth within the market, which just provides strength for us. Now let's look at the bad that happened in 2023. First off, you had the regional bank failures. So you had Silicon Valley Bank, you had First Republic, you had Signature. All went bankrupt, but fortunately were bailed out essentially by the FDIC. That is a huge thing to take note of, because usually you only have $250,000 within these accounts that you're covered with if a bank does fail. But especially Silicon Valley Bank, it had clients with millions and millions of dollars, and all of that was covered by the FDIC. It's a little bit more government spending for us. One of the biggest things that we're seeing, and if you're looking at a house right now, you're really experiencing, is that housing is just unaffordable right now. We have a low supply, and which has drawn up market values in houses if you own homes. And then the interest rate hikes have just exacerbated the problem. So some people have seen their monthly mortgage, if you were looking at a house 3 years ago, and if you're looking at a house now, almost double. And that's just really hard for our economy, and especially for the younger generations that are trying to get into home ownership. We're still dealing with higher prices. So inflation is coming down. It's not quite there, but it's coming down. But a year ago, we were at 8, 9, 10% almost in inflation. And if you're still paying your groceries, if you're still paying for your everyday expenses, you have not seen those dollar amounts come down. Things are still hard to buy. Budgets have gone up, and people are still on the largest amount of credit that we've ever bet. That's a big bad. Because of such the overweight with that Magnificent Seven, those 7 companies represent 30% of the market cap of the S&P 500. Because we have that, We have a lot of companies that can either catch up or maybe they just can't play ball and they go away. If they go away, that would be damaging not only to the market, but to most of us everyday investors. Finally, always going to be a problem, government spending and the ever increasing debt ceiling. At some point, this needs to be reined in, and it's just getting harder and harder to be that person to do it. So I don't know who's going to step up into leadership, but our government is spending more than their budget allows by the trillions and trillions of dollars. And that is just a huge thing to take note. The final thing to talk about is just the unpredictable, and that's the stock market. Whenever we think we have it pinned, it's going to change up. It's going to do things that it's never done before. So with what we're dealing with right now, we might have the first soft landing, which is what the Fed is trying to do with the interest rates. We might have the first soft landing in the history of our economy and our market. It's unpredictable. We need to stay away from timing the market so much, and we need to just continue chunking in and being disciplined and keeping through it. Thank you guys so much for watching this video. Thank you for being a client of this firm, and I look forward to talking to you in 2024.